Hi, and welcome to the Stock Scores Market Minutes for April 9th, 2018. All right, let's talk a little bit about trend reversals. There are typically three stages in a trend reversal, whether it's an uptrend into a downtrend or a downtrend into an uptrend. First stage is a break of the trend line. You then get a retest. So if you have a downward trend, you'll get a break higher, and then you'll fall back and typically build a rising bottom. And the opposite can be said for the break of an upward trend. So you get a retest, and then you start to build a base where you have some sideways consolidation, and then you have a break higher from that base. And if it is an upward trend break, you break the upward trend line, you try to make a new high, you fail, you start to retest the lows, and then break down through support and move lower again. It's a lot more simple to understand this when I show you, so I will show you in just a moment. It's important to understand these stages because it allows you to make the appropriate trades at the right time. We know that every stock has some correlation to the market, and if you understand the trend and where the market is or where the stock is in a trend reversal, you can be looking for whether it is best to buy or short sell. All right, let's look at a chart of the S&P 500 and I'll identify these stages. So this is the 30-day 60-minute chart as of Friday of the SPY, which represents the S&P 500. Draw some lines on here. There was our downward trend line, and that was broken on Wednesday. That was stage one. Now we're getting the retest because we're moving lower, but unless we move to new lows, this is still just a retest. And given the fact that the market had a green candle at the end of the day on pretty strong volume at the end of the day, we are probably going to build a little rising bottom here. So I expect, not certain, but I expect that the market will move up on Monday, perhaps Tuesday. And it will then stall at that level of resistance and go sideways and build the base. And then ultimately, we want to look for a breakout through that 267, 266.50 zone on the SPY. All right, let's look at the longer term chart of the S&P 500, which we've looked at many times. And you can see that during the week, we were actually below the trend line. And that happened early in the week. And I said at the time to the people that are in my live trading webinar, this could be the start of more weakness if we close the week below that trend line. Well, we didn't. We managed to rally back late in the week and ended the week still above that trend line. So we have the tail of the candle below, but we closed above the trend line and therefore we are okay. Now let's be honest, we are hanging on by our fingernails, or the bulls are anyway, but this trend has not yet been broken. And until we get a weekly close through this trend line, we don't have a break of trend. Now think about it this way. If we look at the trend line here, and we broke that trend line, we did a retest, we moved up, we built a falling top, and now we are trading sideways, building that base, which if we ultimately break down through the base, then we're going to get further weakness on the S&P 500. All right, so now let's take a look at the Russell 2000. And again, we can draw our trend line, and it has been touched many times, but we have not broken it, and therefore the small caps are in a bullish trend, although they have been trending sideways for a few months now. Ultimately, we want to see if it can break through that or if we break the upward trend line, and that is when we need to change our approach. For now, you need to be on the bullish side of that market. Moving along to the Toronto Stock Exchange, we had our downward trend, broke that, and now we're doing a retest. Let's see if we now build a rising bottom, and then ultimately it kind of goes like this. It'll build a base, and then we want to watch for that breakout from the rising bottom. We are right here now, and let's see if we ultimately can break to the upside, and that would send that market up toward the highs again. On to the longer term chart, and here is a bit of a tricky one because that long-term trend has been broken, unlike the S&P 500, which has not broken its long-term upward trend. The Canadian market has. Now that doesn't mean that it necessarily has to move lower. It can just go into a sideways range for a while, and so far that's what we are doing. But if we break down through this floor at $22 on the XAU, then it is likely that that market will move even lower, something to watch for in the next little while because we are near that level. Onto the TSX Venture market, which has broken its upward trend line, and I could draw this a few different ways. Either way, we have broken through support. We made a rally. We failed to hold support after the rally, and therefore it looks to me like the TSX Venture is more likely to go lower than higher. Now, the thing about the TSX Venture is it's made up of a lot of companies that, are very small cap, micro cap stocks. And if one of them, finds gold or discovers the cure for a disease or has some positive aspect to its business, those individual stocks can still do well. What this is showing is that the stocks that dominate this market, which are largely the cannabis stocks, gold miners, that sort of thing, they don't have great looking charts. And I think a lot of the weakness that you see in this index comes from the cannabis names, which have had a little bit of weakness of late. Onto the Treasury bond market in the US. US Treasuries broke that downward trend. They're trying to rally. I wouldn't say they've done the retest yet, so we're still due for that retest where we get a little bit of a pullback. Not considerable upside if we do, come down here and then move up again. And ultimately, we want to be very careful that we don't see a break of that support line. We're essentially in a sideways range, not a whole lot of volatility in that range. And that means that interest rates are relatively stable. But we could see a little bit of a rise in the bond market, which means a drop in interest rates. Or we could retest these lows, break down through it. If we break down through that support, that means interest rates are going up. So that's what you need to watch for if you have a concern about the future direction of interest rates. US dollar has been in a downward trend for quite some time. There you can see the downward trend line. We ran away from it. We're pulling back up to it, and we're almost at it now. And so the question is, will we break the downward trend in the US dollar, or are we going to roll over and continue lower? We're getting to that critical stage where we're going to get our break one way or the other. Usually the trend perpetuates. So given that we are in a downward trend, we could come up to that downward trend line, roll over and head lower again. We'll see what happens. If we in fact break through the downward trend line, then we can think about being bullish, but for now be a bear on the US dollar. And being a bear on the US dollar means you can almost be bullish on gold. I wouldn't say it's a bullish chart, but it is building optimism. But we've talked about this for many months now. We still need the breakout through resistance. And so although there is optimism building in this chart because we have rising bottoms on the chart, ultimately none of that is meaningful unless we get the breakout. We don't have the breakout yet, so I call this a neutral chart. Onto the oil chart. On this week, I'm drawing the daily chart just to show you the daily trend line. We really ran up, we pulled back, and now we're building an ascending triangle consolidation, much like we have seen in gold on the weekly chart. We're building that on the daily chart for oil. If we break this upward trend line, be a little bit concerned. My expectation is we will probably bounce back early next week and make another attempt at that resistance level, but it's probably a few weeks away before we get a breakout through that level. And it certainly is possible that we could break the upward trend line, and that would be a negative, breaking the near-term bullish trend. So this is a bit of a neutral chart because we are doing that consolidation right now. When I say consolidation, I mean a period of sideways trading. Finally, the VXX chart, which shows us fear. You can see fear quite elevated. We had a real low period there in January. Then, of course, we had the start of a correction in February, and we're still at an elevated level for the VXX. Not breaking out of this pattern yet. There's your pattern. Call that a pennant pattern. Until we break out of it, we don't really have a next wave of the major correction coming. But there's lots of volatility in here, and it's something that you can trade to take advantage of market volatility. I traded the VXX a little bit last week when the market was pulling back late in the week. So my outlook then, US stocks neutral on both time frames. The same can be said for the Canadian market, although I would say the US market looks a little better than the Canadian because its upward trend line has not been broken. Neutral on both time frames for gold. Oil bullish long-term, neutral short-term because we're in that little pullback right now. Stocks continue to struggle to hold that long-term trend line of support, but they've held it again this week. The buyers are defending that trend line. There is still a risk of a trend line break, so we should remain cautious and watchful of that S&P 500 chart. Gold and oil are stuck at resistance as the US dollar stabilizes and threatens to break its downward trend line. Now, if the US dollar rolls over and moves lower, I expect that will be positive for gold and oil. Remember, fear is still high. There's lots of volatility in the market, which makes it great for short-term traders, but a little bit difficult for the longer-term trader. And there's not a lot of opportunity for the longer-term trader. It really is a short-term trader's market right now. That'll change, but that's the way it is right now. All right, let's get on to the trade of the week. This is a trade that I did on Friday, and it was a short sell trade. I often show buys. This is a worm strategy, but on the short side. I sometimes call this a shocker strategy because it's sort of a surprise to the market when you get this sharp selling. Notice the strong volume and strong downward price action. I've got some indicators that look for that. And so that was the signal to short this particular stock, Mondelez. And it took a little while, it took a couple hours. It kind of tested my patience a little bit, but ultimately went down quite sharply, hitting 9.5 RR, which means for every $100 risk, there was $950 of profit. Ended up closing the day a little higher as the market bounced back at the end of the day, but using a little bit of a trail by one or trail by one reserve reward for risk element, you would have exited that trade at 8 RR. Well, that has been the Stock Scores Market Minutes for April 9th, 2018. Hope you've enjoyed this week's video. If so, click on that like button, subscribe, even click on the alarm button, and you'll get email alerts as soon as I upload a new video. Have a great week in the market and trade well.